let me also welcome on board Anand Tandon, who is an independent analyst joining us on the show. Anand, hi, good afternoon and good to be speaking with you. But firstly, help us with your own sense with respect to the tariff implications on India as a market, because yes, we are waiting for the final announcement. But the trend that we have seen for now is that there hasn't been much of a change with respect to what Donald Trump announced back in April 2nd, and with the 14 odd nations, the major tariffs coming in. Do you believe this case can also hold true for India as well?
And certainly it can. I think the only reasonable tariff agreement that has happened has been with the UK, which is of course a very close ally of the US. For most of the others, they've had to uh, kind of stick with the so-called Liberation Day tariff that Mr. Trump had announced. With India, I think while India has tried to be as reasonable as possible, I'm sure the issues will be different when viewed at from the US side. And it is very likely that we may not get any great benefit in terms of relaxation from the US. So I think we should also gird up for a level of tariff which is higher than where we left it, and somewhere perhaps a little lower than what the threatened tariff was. So instead of 28%, maybe we'll end up with between 15 and 20% by and large on an average, but that's about it.
Okay, so that's the take on tariffs, but also help us with your take on certain sectors that could stand to benefit if the tariff announcement is in India's favor. And even right now, our Southeast Asian counterparts have been hit with slightly higher tariffs compared to what we're expecting to see for us at least. You have sectors like textiles that are doing very well today. What is your sense on this sector and the other, some of the other external facing sectors that could do well if the tariff announcement goes our way?
So there are two ways of looking at it. Either we assume that the US consumer stays where they are in terms of buying the same basket of products, in which case, India is not worse off unless the tariffs are higher than our competitor. It doesn't matter whether or not the tariffs that India pays are higher than what we used to pay earlier. But more important, the question is which is the competitor who is supplying that. So, for example, in the case of textiles, if it was Bangladesh that was taking away much of the quota-free exports into the US, maybe because of the higher tariffs there, so long as ours are not as high, maybe we will actually benefit. So from that point of view, textiles just definitely looks like an area that we may get some benefit out of. The other option, of course, is that there is a down trading, that the US consumer is already very stretched and therefore ends up down trading. Here too, I think you may find that actually the developed markets may have a little bit more of a challenge, especially if quotas, for example, from Japan and Euro area continue to remain high, that India could benefit relative to the others. However, in that context, you have to assume that the overall volume will actually shrink because there will be a negative impact on the US GDP. So either which way, from our perspective, I think it looks like for most of the traditional Indian products, you may have a relatively better bargaining position, but the overall volumes may not be as big.
Pickup is what you're seeing on the market right now. We're pretty much around the session highs after doing practically nothing for the better part of today's trading session. 25,500. It's trying to pick up from that level. So Kotak, of course, is one of the key winners today. There's Asian Paints, BEL, L&T is picking up a little bit. So is the case with ICICI Bank and SBI, along with HDFC Bank and Bajaj Finance as well, which are beginning to pick up. And I guess the Nifty Bank also would have pretty much mirrored what the Nifty is doing, which is why you're seeing that uptick. SBI is seeing that spike up, and there you go. Nifty Bank at the session highs, 0.5% of an uptick is what you're seeing right now. Karan, let's revisit the charts of the Nifty Bank.
Yeah, I think it's a very good up move, almost a 300 plus point uptick for the Bank Nifty. I was discussing this point earlier also, that I think if the markets have to move up higher, Bank Nifty has to play a very pivotal role over here. And specifically at a point where the Bank Nifty has been holding on to that 57,000 mark. I think rarely we've seen, banking index, being less volatile than the benchmark indices. And this is one of those zones where over the last, I think 1 week or so, where the Nifty scaled down 200 to 50 points from 25,700 mark, thereabouts towards 25,450. I think the Bank Nifty has also gone through a very mild bit of a consolidation. I believe very strongly that if the markets have to move up higher, Bank Nifty should play a pivotal role from here on also. I think what matters now is that if large cap stocks manage to just move up into another leg of price uptrend in the banking stocks, so whether it's HDFC Bank, ICICI Bank, Kotak Bank today I think has done reasonably well. So I think if we see 3 or 4 top names which comes back into those breakout modes, I think we may probably expect another 800 to 1000 point uptick also over the Bank Nifty.
Okay, that's the move on the Nifty Bank, beginning to reflect on the index as well, which is finally picking up a little bit. But let's get you some updates from the aviation industry. And the Parliament Accounts Committee met with authorities and representatives to discuss rising airfares. My colleague Samir Dixit joins in with what came about from that meeting.
Parliamentary Account Committee held an important meeting with the key stakeholders on the subject matter of aviation sector. We are picking up from our sources that the key discussion point included the surge in airfares, Air India's aircraft crash, and also the black box recovery, the detailed investigation. And in addition to this, a special demand was raised related to the special audit of BCAS. So a couple of MPs, they raised the point that post Pahalgam terror attack, the flights operating from Srinagar to the other destinations of the country, the airfare, it surged drastically, reaching to skyrocketing prices were there on the website, which created a lot of problem for the passengers, those who were looking to move out from Srinagar, and that was not as per the standard and was ethically wrong as well, and airlines should be held accountable. In addition to this, one of the opposition MP actually raised the point that BCAS should be properly audited, and a special audit should be done so as to identify if there is any loophole that can be fixed in. Also, the Air India's aircraft crash was also taken up in this committee meeting, that what led to the accident, and in terms of safety parameters, how far we can go ahead in taking more stringent steps.
Right, Samir, thanks for all of those updates, but stay on with us. An important development is coming in from the AAIB, and it has submitted its preliminary report to the Aviation Ministry on Air India plane crash case, like you were just mentioning. Samir, also bring us up to speed with updates on this front.
Parliamentary Account Committee held an important meeting with the key stakeholders on the subject matter of aviation sector. We are picking up from our sources that the key discussion point included the surge in airfares, Air India's aircraft crash, and also the black box recovery, the detailed investigation. And in addition to this, a special demand was raised related to the special audit of BCAS. So a couple of MPs, they raised the point that post Pahalgam terror attack, the flights operating from Srinagar to the other destinations of the country, the airfare, it surged drastically, reaching to skyrocketing prices were there on the website, which created a lot of problem for the passengers, those who were looking to move out from Srinagar, and that was not as per the standard and was ethically wrong as well, and airlines should be held accountable. In addition to this, one of the opposition MP actually raised the point that BCAS should be properly audited, and a special audit should be done so as to identify if there is any loophole that can be fixed in. Also, the Air India's aircraft crash was also taken up in this committee meeting, that what led to the accident, and in terms of safety parameters, how far we can go ahead in taking more stringent steps that can further enhance and improve the safety standards of India's aviation sector. So these are a couple of important points that was raised and discussed in this meeting, and this meeting was also important from the point of view that who all attended this PAC meeting. So apart from the PAC committee members, opposition MPs, key airport operator were also part of this meeting. Airline representative from Indigo, Akasa, Air India, SpiceJet, they were also part of this meeting, and the ministry officials, whether it be from Ministry of Civil Aviation, DGCA, BCAS, AAI, they all were a part of this meeting, and now the government is looking to come up with steps. Those will help to further stringent, make the safety parameters more stringent, and much more safer environment can be provided to the air passengers.
All right, thank you so much, Sami, for getting us all those details, specifically from the aviation space. But back to the markets, great move on the benchmark indices, because it's almost a 300 point of jump. What we are seeing on the banking index, and Nifty 50 has also surpassed that 25,500 mark. But within the IT space, one of the other stocks that is doing very well today is actually Sonata Software. And Sharan, since you were bullish on the IT space, can you check this counter as well? How is this stock placed on the technical front?
So technically, after a long consolidation of I think around 3 odd months, it has given a breakout above the 100-day EMA, but still it's trading below the 200-day moving average. So still not that positive. But looking at the volume accumulation in the last 3 months, I think the trend is about to change. So the stock, if it trades above anywhere above 470 to 75 levels, you will expect a trend change to the positive side. Right now, if anybody has made a position, I would suggest to keep a stop loss in the system of 390. If at all it closes below 390 on any given day on a daily closing basis, you should exit it. But given the volume accumulation, I don't think that will happen. So you can continue holding it for targets of I think 470 to 490 levels.
Right. Okay. Let's get in some more strategies as we wind up for the day. Kunal, anything that's looking good to you on the charts?
Yeah, I'll go with a contraband HUL. I think today the stock is a little bit muted, but I think after yesterday's price action move and the stock challenging its 200-day moving average, I believe that eventual breakout could be in the offing pretty soon over the next couple of days. So would suggest a buy with 2500 as a target, stop us at 2350. Apollo Tyres is something which I had recommended yesterday. The stock is doing fairly well for itself, bounced back from its short-term moving averages, and today I think it's nearing a swing breakout. So looks attractive at current levels. Would maintain the buy on Apollo Tyres. Targets remain at 480. Stop loss trail to 460.
Okay, so HUL and Apollo Tyres looking good to Kunal right now. Sharon, what about you? Where are you placing your BTST picks?
So I like HDFC AMC again, looking like it's going to retest its all-time high. Again, a very good volume action today, on back of maybe fundamental. Some report had come out with a target of 6,000 odd level. But looking at the price action, I think it'll retest its all-time high and can give a bigger breakout to 5,400 odd levels. My second pick will be Grasim, as Kunal explained earlier very well. So the stock has taken good support around its 20-day moving average, and I think again it's again getting ready to retest its all-time high and maybe higher. Looking at the price action, so I would suggest a stop loss of around 2780 odd level or a day low around 20-day EMA with targets of all-time high and even more. I think it can easily touch 3,000 odd levels in the coming weeks.
All right, so those are the buy calls coming in from Sharan, as well as tire counters is something that Kunal is liking at this point in time. But just a few minutes before we shut shop for today, and Mr. Tandon, if you can help us understand any new theme that is looking good to you in the markets, because of late we have seen FMCG and staples posting a good quarterly updates. Select counters within the financial pack have been doing well and coming out with good numbers. So any sector that you believe can be good for now for investors to accumulate?
I mean, the market is at a stage where I guess most obvious buys are already well priced. That said, I would still argue that the financials still look quite okay. The lead banks, of course, are already doing quite well, but are likely to continue. NBFCs, you could add to the space given the surplus liquidity that we have in the system. Of course, that will mean that their portfolio will start to weaken, but at least for the next 6 quarters or so, you don't expect to see that actually coming through. So therefore, that could be an area that one is looking at. I think the traditional growth in terms of insurance, asset management, etc., also is likely to sustain. Many of the other sectors like staples, etc., are probably not going to sustain for very long for the simple reason that, if inflation actually comes under control and remains at sub 3%, your nominal GDP growth will now fall in single digits. If you are assuming a real growth of 6.5, and inflation of, let's say, another 3%, you are looking at a nominal growth of 9%. FMCG cannot grow very much more than that. And that will automatically mean that the earnings growth will be again in mid to low level single digit growth. That doesn't sustain for very high stock prices given the current valuations.
Right, okay, that's the take coming in the overall market. Of course, it's going to be all about earnings now. If not for the trade deal, it seems like it's likely. And, it's just a matter of time. Sooner than later, we will hear something on the front of what's really happening with tariffs between India as well as the US. But yeah, talk about earnings, and come Thursday, we'll already be officially kickstarting earnings with TCS coming out with its numbers post-market hours. Kunal, what's the revisit or rather read-through now on IT as a pack?
So I think it depends on how the markets will probably take the reaction post results, because right now there is a phase of lull for many of these IT stocks. Within a range, it's possible that the IT stocks may come back into breakout modes or potential breakout modes or retest of the resistances. But till the time we don't see a breakout of prices for many of the larger cap names, I think it could just be about more of a consolidative move. For example, TCS, I think over the last 2 months or so, from the month of May, somewhere the stock has been struggling to break past about 3600 levels, and it's just been grinding into 150 200 point range, drifting very gradually lower, closing in towards the 50-day moving average, and just try to trade around those levels. Infosys is also very similar. The stock has been trading just around that 1600 to 1640 kind of a band over the very short term, over the last 3 to 4 weeks. So this indicates that we are looking at a point where the markets are getting positioned potentially of a breakout kind of a move. But I think it's always better to wait out for that confirmation, because generally we've seen that when volumes are not seen as a precursor move, the moves, they tend to fizzle out very quickly. So I think if we see post results volumes being on the higher side and the prices breaking out on the upside, that could be a very strong indication that we are looking at a major change of trend for the IT stock. So I think it's more of a wait and watch at current levels.
Okay, so wait and watch for earnings is the call coming from Kunal. But what exactly can we expect from IT earnings this time around? It's expected to be soft for Q1 for IT, but still better than Q4. And mid caps are also likely to outperform large caps. My colleague Pulkit, who tracks the sector closely, is joining us with what we can expect from IT companies for the quarter gone by.
With the result of TCS on 10th of July, IT earnings will start for Q1. So we are expecting the Q1 of FY26 is expected to be modest. If we talk about the mid-tier companies like Coforge, Persistent, LTI Mindtree, they are likely to outperform. But if we talk about the tier 1 companies, TCS, Wipro, HCL Techs, they are under deal ramp downs, and we are not expecting very high growth for particularly tier 1 companies, especially the engineering and research and development division that will remain weak and risky. If we talk about the demand, BFSI demand will remain to be stable, and if we talk about retail, auto, communication and manufacturing, they will be a little bit weak as compared to the last quarter. For the key factors that are influencing, the first major factor is tariff uncertainty, as we don't have the proper decision on the tariffs. So this will be from that clients are prioritizing non-discretionary spends, and they are focusing more on cost optimization. For example, if we talk about the tier 1 company TCS, so as per ICICI Securities, the Q-on-Q growth for CC is around minus 3.4%. So if we talk about tier 2 companies, the Coforge, we are expecting somewhere around 5.5 to 6.5%. Key points to watch in management commentary would be deal pipeline, Gen AI adoption, vertical wise what strategy companies are focusing on, hiring trends and margin levers.
All right, thank you so much, Pulkit, for getting us all those details. So that was the expectation from the IT space overall. But Mr. Tandon, help us with your own sense on the IT sector as a whole. Because of late, the trend that we have been seeing is that the large cap companies, though they used to post decent set of earnings, but onto the stock price movement and the excitement from the investors, the major traction was within the mid and the small end. Do you believe that this trend is expected to continue this time around as well?
Well, overall, the earnings of the sector are not going to grow very high, right? I mean, you are, with the exception of Coforge, which is extremely bullish in terms of their management commentary, almost everything else is sub 5%. And that's the kind of growth that we are looking at on the bottom line, not on the top line. Top line year-on-year growth will be anywhere from 1 to 6 or 7%, let's say at the best. So I don't think it's a very exciting sector. More importantly, if you look at the numbers that are going to be recruited, I think that is a number that people are not focusing on. You are looking at a situation where at least the bulk of the basic code writing requirement is now being done in an automated format. And with that, therefore, you are looking at more either consulting opportunities or more upscaling kind of opportunities. What India is getting now is actually a bunch of people, which people are doing as cost takeout deals, which is not a great thing, because what they are doing is passing on their surplus people with an agreement that over the next 3 years you will hold on to them. And then, while that may show up as revenue growth right now, but over time, what are you going to do with them? Because if they're not required for coding, it isn't as if you have much use for them either. So unless and until there are greater product opportunities or IP creation opportunities in the IT sector, I would be a little wary of going in for the regular services company, which is why the large cap, while it is relatively cheaper in many cases compared to the mid cap, is not very exciting. You may want to look at specific specialist companies which are catering to either products or specific areas where they have greater IP creation possibilities and look for them. The broad IT services sector, I don't think will do anything great.
Okay, so that's the take coming in from Mr. Tandon, but let's also understand the levels that we can expect to watch out for when market opens today. It's been lackluster for most part of the day, barring the last few minutes where we've seen a little bit of an uptick coming in on the Nifty. Sharan, you go first. What levels are you spotting for tomorrow? Can we expect to see a lackluster day given we don't hear anything on the trade front tonight?
So look at especially on the chart pattern, I think it looks like a Poland flag, bullish Poland flag, and I think it's Nifty is on a verge of a breakout. I think you can expect a small gap up opening in the morning around 25,600 odd levels. If at all we don't have any negative news, but still I think overall the market will be sideways. So just expect a small gap up around 30-40 points, nothing major. I think Bank Nifty is still much stronger than Nifty. And I think it can open around 57,500 odd levels despite because there is no negative news around the corner. And if a positive news comes after opening, I said you can expect a gap up and go rally in both Nifty and Bank Nifty.
Okay, so looking optimistic for tomorrow. Kunal, what about you? What are the levels that you would be watching for tomorrow?
So I would actually look at a new swing high for the index. So maybe 25,650 should be crossed for the Nifty. I think the setup which you've seen in the last half an hour, last 1 hour, comeback of large cap names, comeback of stocks, short covering across few sectors. I think that just about whiffs off that maybe the markets are expecting some sort of a positive, indication. And I think if the global markets don't disappoint, we could be looking at say 25,650, 700 as a potential, range for the index tomorrow.
European markets as well, pretty quiet there too. DAX and FTSE just very, very marginally higher. FTSE is up only about 12 odd points or so, and a 60 odd point uptick coming in for the DAX. For the CAC, it's absolutely flat. FTSE MIV flat. And Stock 600 as well is really not going anywhere. So pretty much in wait and watch mode. That's how all global markets have been. Asia, though, to be fair, perked up quite a fair bit after that initial knee-jerk reaction to all the tariffs that were slapped on Japan and other countries. So Hong Kong closed in with a solid 1% gain, and to think of it, most of these markets started off in the red. Look at Japan, 101 points up in the green is how that index actually shut shop, and Shanghai managed to scale up a good 0.7% towards close. But here's Nitin Bhasin as well from Ambit talking about what he's liking in the market right now.
When you look at the sectors, again, within the IT, where we like IT as a space, there could be some of the mid-cap IT companies which are perhaps very punchily priced for the quality of the business. There's something like a Coforge could be one, something like a Persistent could be another one, where we think that these are really, really punchily priced. At the same point in time, there could be stocks like DMart in the consumption space, where we find them very, very punchily priced, would remain away from such names. And at the same point in time, I would say even consumer durable companies like Voltas, which appear to be very punchily priced and perhaps stuck in a very, very highly competitive zone where they're unable to create value from the one business of consumer durables that they are in, or the projects business. Those are the 3 or 4 names that stand out. But at the same point in time, in the banks also, we've highlighted before, names such as Kotak, etc. Are the ones. What we don't like is themes like, I would say, defense today, which is like a talk of the town. There could be stocks such as Godrej real estate, punchily priced. Again, I would say so, though the real estate sector holds up really well.
Okay, that's the word coming in from Nitin Bhasin of Ambit Capital.